China's the world's largest trading nation, the world's second largest economy, more than 3 times bigger than Japan, the third largest. So everybody has an interest in this and is going to be affected by it. I think China's just growing much more slowly than we've been used to. We've had 20 years of exceptional economic performance, coming back to a more sober reality. This was always likely at some point. The timing was up in the air. Over the last few years of the pandemic, I think that the timing's become clearer.
Let's talk about why it was always likely that its growth would taper off. Is it simply because its economy, its population is too big to sustain?
Look, I mean, that's a separate issue. China's population is now shrinking. The economic evidence is for economies which have falling population, the economic dynamics change quite substantially. Italy is a recent example, Greece and Japan are other examples, and China's not going to be the same as those, but I think that shift in demographics is a big story, particularly when debt is nearly 300% of GDP, and particularly when China is now approaching middle income status. If you like, it's demographics, it's debt, and in some way it's destiny through this middle income phase that I think growth was always likely to slow materially.
Many countries try to address their population declines with migration. Does China have realistic policy options in this area?
There is a scale challenge, of course, for China. 1.3 billion people. It's for Australia to lengthen our demographic issues with migration is an option. New Zealand, Singapore, even Canada. For 1.3 billion people, it's difficult to think China could do migration on the scale required. Their sources of inspiration, I think, need to be much more domestic.
You touched on debt. Alarm bells have been ringing for some time, particularly in relation to its property development sector. Just expand for us a little on what we know about the scale of China's debt.
Look, as a macroeconomist, I would be using a small a for alarm rather than a big A for alarm. I don't think China's at meaningful risk of a debt crisis or something like that. I think this is more of a debt issue. Let's remember, debt is borrowing from the future, and I think there's some time. The economy needs to adjust now to the debt load that China has. It's a household sector issue as well as being a corporate and government issue. The household sector in China has debt as a share of GDP not that far off Japan or even the US. So China in no way is a low debt economy with lots of growth runway. Most economies, when growth in debt slows, the economy slows as well.
You have said that many Western commentators have misinterpreted the severity of China's economic woes. Are markets doing the same?
Markets, I think, are making a different error, and I look, feeling a degree of humility about saying other people are wrong. In my experience, though, China as a very large economy has more limited policy options than smaller economies. Smaller economies can often make policy choices and get away with it because they don't have feedback effects into the world. If China does something substantial, it's likely to also have impacts on the world. That, limits China's degree of freedom, just like we see for US policy options. Markets, though, have become very pessimistic and are extrapolating everything in the short term. I think China's done enough on policy to stabilise the economy. In fact, we count more than 200 individual policy measures across a whole range of issues. So growth is slower, but I think China's a long way from an acute crisis.
ANZ recently revised its outlook for China. What is your forecast now of its economic growth and the potential for it to change or boost its economic trajectory?
I don't think there's meaningful policy choices that can make a substantial difference to China's growth over a run of years. Certainly there are things they can do that will affect this year and next year, and they seem hesitant to do that. Personally, I think that's a good policy choice. You can borrow more money and fuel your economy for another year, but if you're then left with a bigger debt hangover, I don't think you're further along the road. This year I expect growth at about 5% and next year about 4%. I think the market is expecting something lower than that. 4 would be the lowest in the modern period outside 2020's pandemic-affected year. But I think, given the broad history of economic development across a whole range of economies, if you do 3 or 4% a year for a couple of decades, the increase in living standards is still extraordinary.
Richard Yetsenga, thank you.
Thank you.